Now let's bring in Jeff Small, president of Arbor Financial in Melbourne, Florida. He's author of the best-selling book, Turning Financial Planning a Right Side Up. He's a periodic guest host right here on The Income Generation and the brand ambassador for the Retirement Income Store. Jeff is frequently in the media of various outlets. And last year he predicted that debt service federally would increase substantially unless the Fed reduced rates. And of course, the Fed did start reducing rates mid-year, much to the surprise of many. So tell us, what's your crystal ball tell us for 2020, Jeff?
Wow, 2020. Well, I think we're going to see an element of political risk affect the markets. And if it starts to look like the country's leaning to the left, I think the companies start to batten up the hatches, they stop spending as much, and corporate stock buybacks slow down dramatically. And if that happens, that'll affect the demand for stocks in the market, and we won't have the year that we had this year, like a 25% gain again.
And that's a sentiment of a lot of people that really what the elections look, at various points. July, we could think, gosh, Trump is a shoo-in, and then in September, we can think he's not. So the markets could ebb and flow, as you said, with that news. But how about a recession? That shouldn't affect the economy per se, unless corporate America battens the hatches to the point where they stop capital spending or they start laying off. What are your thoughts on the economy itself?
It's going to be really hard to slow the inertia of the economy down. It is so strong right now. There is so much lending going on and default rates are in check. The economy is booming because the consumer is absolutely incredibly strong, the strongest they've been, with the lowest unemployment in 50 years.
So you think the economy could keep going, even though the stock market could drop? Because, of course, the stock market is more animal spirits. The economy is the economy.
The economy and the stock market are going to diverge. The economy is going to stay stable. The stock market is going to be unstable. We're only seeing maybe 2% growth next year in GDP, but that's better than being at zero.
15 seconds left. Tell us, what do you think the Fed's going to do in 2020?
I think the Fed's going to lower rates to get Trump reelected to keep asset prices high. That's their job, is to protect institutions, not create full employment.
Jeff, thanks so much for being on the show as usual. Great to have you.